Hello, welcome once again to Crypto Maestro's YouTube channel. On this channel, we make the journey from beginner to maestro in crypto a stress-free one. So, in our last video, we talked about the blockchain technology and how it's revolutionizing industries, or how it can revolutionize industries. And in today's video, we're going to be going into what cryptocurrencies are, and we're going to look into the first ever cryptocurrency created, which is Bitcoin. So, without wasting much of our time, I'll go into the video. So now, what are cryptocurrencies in the first place? We need to look into that. So cryptocurrencies are actually digital currencies that use encryption techniques to regulate the generation of units of currency and to verify the transfer of funds. Now it operates on a distributed ledger system, which is basically, it operates on a blockchain. If you haven't seen the video on the blockchain technology, you should go back to our channel and watch that video. That's the last video posted. So just go over there and get acquainted with what blockchain technology is. So cryptocurrencies basically are digital currencies, and Bitcoin was the first ever cryptocurrency in existence, and it was created in 2009 by an individual or group of individuals under the name of Satoshi Nakamoto. But we're going to get into that as we go on. So now, what is the advantage of cryptocurrency over traditional systems, like over our banking systems and all that? Now, cryptocurrencies use a decentralized technology, so it's not under any government or any central authority. So no central bank is going to determine whether you can send your money or receive your money from your crypto wallet, or send money from your crypto wallet to somebody else. It is basically giving you the opportunity to become your own bank. That's what cryptocurrencies are there for. So now they also have like very strong security. They use cryptographic techniques to secure transactions and to protect funds. Now, cryptocurrencies also can be accessible globally. As long as you have an internet connection and a device that is compatible, you can do whatever transaction you want to do. So now basically in 2017, it was said that over 1.7 billion adults were unbanked. But with cryptocurrencies, that can be cut off, because you don't have to go to the banks. You just get your device, download an app, get the wallet, and boom, you're transacting. Now also, it encourages financial inclusion. It encourages systems like peer-to-peer lending and decentralized finance services and all that. So those are the advantages of cryptocurrencies. As we look into Bitcoin, we'll come to see a few more advantages and disadvantages of cryptocurrencies. So let's look at Bitcoin, which was the first cryptocurrency ever created. So basically, Bitcoin is a digital currency that uses the blockchain technology with the aim to eliminate the need for central authorities or governments or banks and all whatnot. You understand? Basically making you your own bank. That's just the underlying statement. It was trying to give a control of the money back to the individual, not by a central authority, either a government or a central bank. So it uses blockchain technology to support peer-to-peer transactions between users on a decentralized network. Now, Bitcoin was first, the white paper of Bitcoin was issued and published in 2008, and in 2009 the project for Bitcoin was initiated. So it became the first ever blockchain and the first ever cryptocurrency in existence. So in 2009 it was created by an individual or group of individuals I mentioned before under the name of Satoshi Nakamoto. Now the transactions are authenticated through a proof of work consensus mechanism. Now the consensus mechanism is kind of like a protocol used to generate tokens. We're going to look at that later. There are different kind of consensus mechanisms. There's a proof of work, which is what Bitcoin uses, and there's a proof of stake, which Ethereum has upgraded into, because they also used to use the proof of work consensus mechanism before now, but last year, September in 2022, they launched their proof of stake mechanism. Now the proof of work mechanism works in a way where miners generate and circulate this Bitcoin into the market. So miners are responsible for mining the Bitcoin and putting them into circulation, and in that process they receive rewards for each block that they mine. So now, how does Bitcoin work? If you had watched the video on the blockchain, I kind of like gave a description of how it works. So let's say I want to send money to someone in China. So as I punch on my phone and do that transaction from my crypto wallet, that transaction is sent into the blockchain, the Bitcoin blockchain, the Bitcoin network, and the miners would verify that transaction, and if it is legit, it's coming from a valid source, it will be sent into a block, and that block, when that block is full, it will be chained into the previous blocks that had been created. So basically it's the miners that verify and confirm transactions. So that's just how Bitcoin works. And after the transaction is verified, the receiver and confirmed, the receiver receives the Bitcoin that is sent. Now, as I mentioned before, Bitcoin is powered by blockchain, and it was the first ever blockchain created. It uses a public and a private key. Now we're going to get into all that later. The public key is like your wallet address, which you use to receive your Bitcoin, and the private key is what, in combination with the public key, signs transactions from your wallet. So let's forge ahead. Now, what are the pros and cons of using Bitcoin and cryptocurrencies? As I said before, Bitcoin is decentralized and it can be accessed from anywhere in the world, and because of its decentralization, you can be your own bank. You can control your own funds. Only you know how much you are worth. No bank or no government has access to your wallet, so you are basically your own bank. And it's a secure network. Also, it's transparent. Anybody can view the blockchain ledger to see what transactions are going on. But those transactions don't really kind of like show your person. It's just the wallet address. The wallet address can be tracked. So you can track whatever wallet address you want to track on the blockchain. So that's just it, without knowing the individual behind the wallet address. So there's universal access and potential for anonymity, as I said. So now the cons of using Bitcoin and cryptocurrencies. As an investor, you need to know that the cryptocurrency market is really volatile, and prices fluctuates without consent or without I don't even know what word to use right now. But the market is a volatile market, and you need education and understanding of the cryptocurrency space to go into it. Now, another thing that the market suffers is regulatory concerns. Now, although most people have started using cryptocurrencies or adopting the habit of using cryptocurrencies, regulation is still not certain in some places. But with time, there'll be mainstream adoption, and I believe all that will be out of the concerns. So security concerns, risk of hacking or fraud. Now, there's also a lot of crypto scams out there. So before you go venture into the crypto space, you need to have someone that has been there, and that is what this channel is built for, to help guide you and make sure that you are doing the right things that you need to do to succeed in the space. So stick to this channel, and we're going to show you all that you require to succeed in the cryptocurrency space. So hacking, although the blockchain cannot be hacked, but centralized exchanges like Binance and Coinbase and a few other exchanges out there, KuCoin and OKX, can be hacked. And if you leave your funds on exchanges like that, then you're vulnerable to hacks also. So in a future video, we'll be talking about the different types of cryptocurrency wallets, and I'll be letting you know which wallets and what wallets are the safest to store your cryptocurrencies. So let's move ahead into the next slide. Now, another thing that you need to take note of as an investor is the supply of Bitcoin. Now, Bitcoin has a fixed supply of 21 million coins. So what this means is that there can never be anything above 21 million Bitcoins ever in existence. It has been pre-programmed into the blockchains. So throughout whatsoever it is, it's going to be as mining, the mining event takes place, as the mining occur goes on, the highest supply, the fixed supply of Bitcoin is at 21 million, and it cannot exceed 21 million Bitcoins. And so at the time of making this video, there is already over 19 million Bitcoin in circulation. So we have less than 2 million Bitcoin to be mined by miners over time. Now, what does this do? This creates scarcity, similar to like resources like gold. Scarcity can increase perceived value, and that is one thing that has been driving the Bitcoin price over time. With a limited supply, there's an upper bound of the number of Bitcoin available, and it may contribute to the potential as a store of value. Now, so we have a limited supply of Bitcoin. By the time the 21 million Bitcoin is in circulation, and price and cryptocurrency adoption increases, rather not price, cryptocurrency adoption increases, believe me, you already know what that can do. There's limited supply and there's high demand for the commodity. We're all economists, so we already know what that is. And that also creates a kind of like a deflationary nature for Bitcoin, because it is not like your fiat currencies, which your central banks or your government can just decide to print whatsoever amount of fiat currency that they require to print. That causes a lot of inflation. But with Bitcoin, it's kind of like a deflationary system. So let's kind of like move ahead. And also, another thing I must mention is Bitcoin is divisible into smaller units called satoshis. So you don't really have to buy one whole Bitcoin. You can buy fractions. You can buy like 0.00 something or 0.01 or 0.1. You can buy fractions of a Bitcoin. You don't need to have all the money to buy a whole Bitcoin for you to own Bitcoin, So you can start investing in Bitcoin gradually, start buying fractions, So on our next slide, we're going to talk about how Bitcoin is earned. Now, there are basically two ways of earning Bitcoin, which is one, the native way of earning Bitcoin, which is through mining, and the other is either buying Bitcoin on an exchange or peer-to-peer platform. Now, other ways that you can get Bitcoin is from payments, maybe online payments. You work online and you get your salary through cryptocurrencies. That's another way you can earn Bitcoin. But traditionally, the ways to earn Bitcoin is through mining, or you buy Bitcoin from someone that already owns Bitcoin. So we're going to talk about that mining process. Now, the mining process is being done by computers with really high graphics cards and all those kind of stuff. Like if you look in the image over here, this is a Bitcoin mining rig. Now, to set up a Bitcoin mining rig is quite expensive because you need a lot of high-end computers, a lot of electricity, also a lot of power is consumed in the mining process. And the miners are rewarded per block, So Bitcoin mining involves complex mathematical equations, solving complex mathematical equations using specialized hardware, that validate transactions and then add them to the blockchain. So the miners are being rewarded based on block rewards. So when they mine a particular block, they are rewarded for that block. Now, there's what we call the Bitcoin halving. We're going to talk about that in the next slide. But as new Bitcoins are created, these miners are the ones generating the new Bitcoins from the mining process and circulating them into the market. So they also maintain integrity of the network. They are the ones that are the nodes or the computers that hold the blockchain, the Bitcoin blockchain in place. So now let's look at what the Bitcoin halving is. Okay, I'll also go back to the previous slide so we look at something here. Now, if you look at this image on the right, the image on the right is the reward system for miners, and that is what is also called the Bitcoin halving. Now, this halving event occurs every 4 years, and every 4 years, the block reward of miners is reduced by half. So if the previous block reward was 50 BTC, now if you look at it, in 2020, which was about 3 years ago, so the next halving is 2024. 2020 was the last halving. So that's the block rewards for miners right now is at 6.25 BTC per block. So wherever the miners mine one whole block and adds it to the blockchain, they get 6.25 BTC. Although it's a really cumbersome process and you burn a lot of electricity and high-end machines. Although there are other mining applications that you can use, like the ant miner, which is kind of like a little bit smaller, and you can use it to join on mining pools and generate income from there. But basically, the halving halves the block rewards of miners, and that is one thing that also drives the price of Bitcoin and creates a hype during the halving period. So in the next year's halving, the miners' block rewards will be reduced to about 3.125, right? 3.125 BTC per block. I think they're about, so that's what the halving event is all about. So every 4 years, it involves the rate at which new bitcoins are created and introduced into circulation. So it also reduces the amount of bitcoin that is introduced into circulation every 4 years, thereby creating scarcity and deflationary metal. With a fixed maximum supply of 21 million bitcoin, the decreasing rate of issuance during the halving event reduces the rate at which new bitcoins are created and also contributes to an upward price pressure and potential value appreciation over time. That is why investors believe that Bitcoin is a good investment over time. So now we're going to go into a few security concerns that you need to look at when dealing with Bitcoin and cryptocurrencies. Now, although the transactions are encrypted, now some users misuse are careless with their passwords and probably wallet addresses and all this kind of stuff. So those are things that need to be looked at. Then there's a high risk of hacking when you store your crypto on exchanges and not on non-custodial wallets. I'll go into that in a future video, as I mentioned before. Then password security is another thing that you need to be careful with. You need to always use two-factor authentication so that you make sure that your wallet is secure. Now, that two-factor authentication is a kind of a security measure where they have to send you codes to either your cell phone, or you can use an authenticator app like Google Authenticator to secure your wallets. So when we go into the videos on wallets, different type of cryptocurrency wallets, we'll discuss more on all that. So now, what are the current use cases for Bitcoin and cryptocurrencies? Now, a lot of people like cryptocurrencies for investment, like me. In fact, like over 80% of my funds is always in crypto. I only keep what I'm spending in the bank. I don't keep my money in the bank. So it's also good. It's also used in peer-to-peer transactions. It can be used for online purchases. It can be used to receive payments from online platforms, like from trading platforms, from job platforms. And it's also really great when it comes to cross-border payments because of how fast it is and how low the transaction cost is. So these are some use cases for Bitcoin at the moment. Now, what's the future for Bitcoin and cryptocurrency? I believe cryptocurrency is like the future of money. Money has evolved over time, from the time of barter trade down to using of cowries and feathers, and moved over to coins and gold coins and silver coins, and also graduated into paper money, and moved up onto credit cards and debit cards. And now we are moving into a digital system, so with time, before paper money was accepted, from the inception, it took over 400 years before paper money became widely accepted. Cryptocurrencies it's not even up to 15 years yet, and it's already making this kind of a headway, so cryptocurrencies are the future. They are digital money. They are ones and zeros. It's money built on trust. You are your own bank, so I believe that mainstream adoption is coming in, and even though a few countries are banning cryptocurrencies, I just feel that that's news behind they are bagging these things, Now, regulation and stability. Over time, governments will begin to regulate cryptocurrency, and that will also provide more stability in the industry. It is likely that institutional investors will begin to invest if there are regulatory bodies creating regulations to regulate cryptocurrency trading and investing. So I believe that cryptocurrencies are the future, and they are the future of money. And another thing I need to mention is, imagine that it's only about less than 3% of the world that is into cryptocurrencies at the moment. That is like an amazing thing. If you're getting into cryptocurrencies right now, you're like the first set of people getting into cryptocurrencies. You are the future billionaires and trillionaires. It's like the 2000 internet and .com bubble. So cryptocurrencies are the future of money and the future of the internet. Now, to conclude this slide, or to conclude this session, as an investor that wants to go into cryptocurrencies, you need to weigh the potential risk and reward in the space. Now, even if there are high rewards being made in the crypto space, there are also high risks. So there are some factors that you need to consider. And the number one factor you need to consider is education, and that's what we are dedicated to on this channel. That's why you are subscribed to this channel. That's why you are liking this video, and that's why you are sharing this video with one of your friends or family. Now, other things to consider include price volatility, market sentiment, and security measures. Do your own research. Research is very important in the crypto space. You cannot do without research. Diversify your portfolio and aim for the long term. Don't look for short-term gains. Short-term gains kill you. Additionally, consider market liquidity, your financial goals, and tax implications depending on where you are in the world. Despite high potential rewards, cryptocurrencies carry significant risk due to market fluctuations and their speculative nature. Follow who know road. Subscribe to this channel, like this video, share this video with a friend. Peace out, guys. This is the Crypto Maestros channel. Tell your friends about it. Thank you.